Hey guys, Justin Bryan here from selfmadesuccess.com, and in this video I want to help you become a better investor, whether you're new to this or whether you've been doing it a while, by giving you 13 investing tips that Warren Buffett himself teaches. And if you don't know who Warren Buffett is, he's one of the richest men in the world. He's been one of the richest men in the world for years and years, and he's also known as one of the greatest stock traders of all time. So you can definitely learn a lot from him, and that's why I've broken down some of his most important principles into just 13 quality investing tips. So here's the first one. It's diversify, and this is kind of an easy one that you might hear a lot, but it's definitely something he believes in. He says don't put all your eggs in one basket. So, have a few companies that you're invested in. Don't put all your eggs in one industry. Don't put everything into one company, because something can always happen. You never know what the future holds. Number two, don't follow the crowd. So you might hear a lot of news, you might see a lot of blogs, you might see a lot of TV shows, and people trying to give out their 2 cents on what the stock market's going to do, whether they're going to panic or whether it's a great time to buy. And he says don't just follow what they do or what they say. He says you want to be greedy when others are fearful. You want to be fearful when others are greedy. It's that simple. So he says to pretty much be skeptical of what most people are doing in the stock market, because most people are not making good money. Most people are not right. Only a handful are right. Most people are going to be wrong. And if you see people buying a lot of stock in something, you might want to consider selling. Or you see a lot of people fearful of stock and start selling, you might think about buying. And recently, for instance, a lot of people are scared of Apple, and they're worried about that. And this is a company that's really dominated its industry for the last decade. And you see someone like Warren Buffett, and you see these reports that he's actually buying a bunch of stock in Apple when a lot of other people are selling. So he sticks to these principles, and this is one of his main ones, just to not worry about what the public is doing. Number three, be certain. He says risk comes from not knowing what you're doing. So if you feel like your investing is very risky, that just means you don't know enough to really be investing in the first place. So you need to know what you're doing before you start really getting into this. But he says that it's not as risky as a lot of people may tell you it is. It just has to do with what your principles are, what your strategy is, and what you're willing to do, and if you're actually smart about it, if you have the right temperament, things like that. So if you have a good core set of principles like he does, then really no investment is a big risk. Number four, this is one of his biggest teaching points, is you should be in it for the long haul. You shouldn't be worried about just investing something short term and then selling it right away. He says if you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. So, that's a really powerful statement, that if you're just planning on buying stock because you think it's going to jump, or because it's jumping, then you're going to sell it right away. He says don't think that way. You should be thinking about stocks that you want to keep for long-term commitments. And he also says in the short term, the market is a popularity contest. In the long term, the market is a weighing machine. So he also says our favorite holding period is forever. He says time is the friend of the wonderful company, the enemy of the mediocre. And he also says only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. So you need to be investing in companies that you think are high enough quality and have a good enough outlook to where you could keep them for 10 years and not worry too much about it. That you would feel comfortable having stock in a company for 10 years before investing in them. I mean, he's really all about the long haul, and look how successful he's been thinking that way. Number 5, past trends aren't everything. So he says if past history was all there was to the game, the richest people would be librarians, which obviously they aren't. And the investor of today does not profit from yesterday's growth. So he says don't worry about yesterday. Don't focus too much on trends. And there's always people trying to predict things with formulas and things like that based on what happened in the past, and they make all these complex algorithms and stuff. And he's really not a believer in that. He's a believer in just sticking to a few simple principles, following his gut, investing in companies that he believes will be around for a long time, that have a really good bit of leverage on their competition. And he doesn't really believe that you can just predict things based on what happened in the past and what some numbers said 10 years ago. So, take it for what it's worth, but he says past trends aren't something you should always be focused on. Number 6, invest in top quality. He says it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. He also says price is what you pay, value is what you get. So he's all about value. He's all about investing. If it costs a little bit more per share to invest in a very high quality company that he really feels good about being around for long periods of time, he would much rather do that than invest in a company that may be okay for a while, but has a really good price right at the moment. So he's all about quality companies, even if they're a little bit higher priced. And obviously he's going to look for deals, which we'll talk about in a minute, but you need to invest in companies that you really know are doing their best and are really looking good for the future, instead of just worrying so much about what the price is and the potential. Number 7, be neutral. He says the most important quality of an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. You're dealing with a lot of silly people in the marketplace. It's like a big casino and everyone is boozing. If you can stick with Pepsi, you should be okay. So he's basically saying that you shouldn't get too high or too low on any strategy. You shouldn't be all against whatever the crowd does, and you shouldn't be all for what the crowd does in investing. He says, a lot of people are going to do a lot of stupid things around you. Just keep your cool, be calm, look at the logic behind the stocks, look at what companies are high quality and should be around for long periods of time, and stick to just what you know and what you don't know, and learn as much as you can and invest in quality companies. He says, don't worry too much about the public, don't worry too much about being too far-sighted on either side. Just stay neutral, keep your temperament cool, and make logical decisions. Number 8, he says never lose money. He said rule number 1, never lose money. Rule number 2, never forget rule number 1. So he's really all about making safe investments for long periods of time. I mean, you might sound boring, but someone who's made billions and billions of dollars doing this like he has, you have to listen to him. And really, it'll probably keep you from having so many headaches and being up at night and losing a lot of money, because if you take his strategy and just use it for the long haul, then you really can focus on other things and not have to worry too much about losing sleep over whatever you're invested in. If you're invested in things that could just drop terribly the next day, you're probably not making good investments. So he just says don't lose money, don't take stupid risks, do your homework, and invest in quality companies that you pretty much know will be around for years and years. Number 9, look for great deals. He said whether we're talking about socks or stocks, I like buying quality merchandise when it is marked down. Also, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. So he's all about taking advantage of opportunities, and you'll find that a lot of very rich people are the same way. But when it comes to stocks, if you see a quality company with their stock down a little bit one day, you might need to really consider taking advantage of that, buying what you can in it. And if you know that company is going to be around, you know that company is really high quality and is still making a huge impact on the world, then you should be able to definitely multiply your money on that. And opportunities don't always come frequently, so he says you should always take advantage of the ones that come by. So say for instance Apple, like some people are saying, oh, the iPhone 7 won't be any good and they won't, people are selling and they're panicking about it. But you see someone like Warren Buffett who seems to be investing in them, and when everyone else is panicking. So you really get a sense of his style from these types of quotes. Number 10, invest in companies that interest you. So he says buy into a company because you want to own it, not because you want the stock to go up. He also said why not invest your assets in the companies you really like. As Mae West said, too much of a good thing can be wonderful. So he's talking about how, companies you understand, companies that you have a really good relationship with, that you use a lot of products from, you use a lot of services from, that you really admire. Maybe it was started on an idea that you wish you came up with or you're just passionate about. And a lot of times when you feel that way about a company, a lot of other people do as well. So he said it's not always a bad thing to actually invest in companies that just interest you. Now, obviously, some companies that interest you are going to be doing better than others, but, and he's not saying, toss all logic aside. He's just saying that, chances are if you like these types of companies, you really wish that you had come up with the idea that they're run on, that you wish that you owned that company, that you admire how it's being run, and you think the future is super bright for them. You should invest in companies like that instead of just companies that all you're worried about is the stock price. Number 11, look at the company's advantage. So he says the key to investing is not assessing how much an industry is going to affect society or how much it will grow, but rather determining the competitive advantage of any given company and, above all, the durability of that advantage. So a good company to invest in not only needs to have a quality product or quality service, good management, good staff, and ownership, but it needs to have a competitive advantage that no other company really has. And you have to look at how long it could have that advantage, what the durability of it is. If you can find a company that's high quality, that's run well, has good ownership, and really has a competitive advantage that should last for a long time, then that's the kind of company you should really look into investing in, according to Warren Buffett. Number 12, don't worry about public opinion. He says, let blockheads read what blockheads wrote, and a public opinion poll is no substitute for thought. So, I've read before that Warren Buffett is a big believer in just sitting and thinking for a time each day, and he'll just think silently and put all things aside and just contemplate what's going on. He's a believer that, following your gut and following companies that are just of high quality that you can really look to be around for long periods of time is better than taking so much from these blog posts and news articles and things like that are telling you, oh, this company's going under, they're panicking, they're breaking all this news, and he doesn't get concerned about that. He's very consistent, he's very neutral, he's very low-key. He doesn't worry too much about going too far one side or the other or getting emotional with his decisions. So he doesn't worry too much about the media and what they're saying. He relies on what he knows, what his principles are, and his gut feeling more than anything. And last but not least, he says to keep it simple. There seems to be some perverse human characteristic that likes to make easy things difficult. The business schools reward difficult, complex behavior more than simple behavior, but simple behavior is more effective. He also says beware of geeks bearing formulas. So you'll probably notice in trading today that a lot of people are trying to come up with formulas that can predict the stock markets. And most of them are failing because you really can't predict exactly what's going to happen, with every single company. And he's a believer that you can't just do it that way. There's not some magical math formula that's going to really just predict everything right. And he also believes that simplicity can be a lot more effective than overcomplicating things. And these formulas, for instance, are things he believes are just overcomplicating things. So, a lot of people will, make things way more complex than they need to be. He says really just sticking to simple principles and things like that can really take you a long way. And if you follow the things that he talks about, you really have a much better understanding of kind of his style and what made him so successful over the years and so consistent. So if you got something from this video, if you feel like you learned a few things that maybe you didn't know about Warren Buffett, or some of the things that you might be able to apply to investing, or that you might want to look into, please like the video and subscribe so I can bring more videos like this for you to help you with your investing and entrepreneurship and things like that. If you want to add some other things that Warren Buffett teaches, or just let me know what you thought about the video, you can let me know in the comments. I'd love to hear from you. And if you want to contact me directly or get some in-depth blog posts on this kind of stuff, get some actual courses that you can follow with step-by-step strategies that you can use, and things like that, you can go to selfmadesuccess.com. Otherwise, I hope you enjoyed the video, and I hope you have a great day.